Welcome back to the channel, guys. I'm your host, Buckning, and today we're going to give you an update at the beginning of the week here in our dividend portfolio, and then we're going to talk about earnings season here for Q2 for banks. And the reason we're going to talk about the Canadian banks is because we own 4 of the big 6 or the big 5. I don't know if you consider National Bank as one of the big 5, but they are on the list. I think they're number 6 when it comes to the big banks of Canada. And so we will talk about that, and then we're going to talk about maybe a little bit about dividend traps and so on and so forth. So if you're new to the channel, welcome. This is where we put $100 a week into a tax-free savings account to build a dividend portfolio right in front of your eyes. If you're not new, welcome back. And so as you can see here, the portfolio for the day, closing out at $11,864.41. We're up $62.02, up 0.53%. For the 1 week, we are down $567.32, down 4.56%. For the 1 month, we're down $628.05, down 5.03%. For the 3 months, we're down $798.88, down 6.31%. For the 1 year, we are up $362.34, up 3.15%. And for the all, we are up $1,233.95, up 11.61%. So that is the portfolio here. We currently have $19.40 in the cash account and $100 that will be deposited probably tomorrow or the next day there. As you know, every week we put in $100 to build a dividend portfolio right in front of your eyes. So that is the portfolio. And so it's Q2, second quarter for the banks. And as you know, we own a lot of the banks. As you can see here, we have BMO in here. We got Bank of Nova Scotia, which already reported their earnings. We have Royal Bank of Canada and TD. The only one we don't have in here is CIBC and National Bank. And so Bank of Nova Scotia did release their Q2. I haven't listened to anything. I haven't looked into it, but I'm pretty sure they did beat their earnings. Had a strong year for sure. The cool thing is that even though as of today, when you're watching this video, I think it's BMO or someone else will be reporting their earnings before market open there. But for Bank of Nova Scotia, let's talk about them because they did some cool things with everything going on. As we know, the market is not as strong as we would like it to be. There has been a lot of sell-off in certain sectors, a lot of big sectors, specifically the tech sector. And the economy is it's rough out there. Housing was going up and now it's slowing down. So we're going to talk about that as well. GDP, inflation, interest rates going up, things like that all play a factor in how banks perform typically. But it's amazing that Bank of Nova Scotia, who has a big presence in Latin America or down south there, way down south, they had some pretty good growth. And the cool thing is that they also performed a stress test, and this is what I've heard from word on the street, is that with the housing market slowing down, they performed a stress test where if here in Canada, Toronto, which is in Ontario, and Vancouver, which is in British Columbia, if they were to drop 50% in the marketplace, Bank of Nova Scotia would still be able to manage what is going on. If you don't know, the mortgages that these banks hold play a big factor in the bank's performance, believe it or not. So when you go to a bank and they hold your mortgage, it does help them quite a bit based on their business models. And I don't know if that's with every bank, but I know for a few, mortgages are what they consider a sticky product because you hold that mortgage for quite some time there. Because if you break a mortgage or a term, there's typically a penalty based on the term that you have. And so consumers are typically not apt to move their mortgages in the middle of a term or do any refinances or anything like that. So it kind of just stays there. And what that gives these banks opportunity to do is to bring more business in, like checkings accounts, investments, and so on and so forth. So it is considered a sticky product for banks. And so Bank of Nova Scotia was the first to announce their earnings. And to be honest, I I was kind of nervous going forward after today. Maybe there's a little bit of hope in there, but as soon as before this earnings call that Bank of Nova Scotia had, I was nervous. I was nervous because the economy is kind of struggling. There's things happening. Commodity prices are going up, like oil. Price of grain is going up. Housing market is slowing down. We've seen a decrease in a lot of the metropolitan, like the big concentrated areas in Canada, and we're seeing kind of the slowdown happening. But interest rates are still going up, which is okay for banks, which is actually really good for banks. And inflation continues to rise. And there's just a lot of turmoil. There's a lot of investor sentiment that is just not on the positive side of things. And I was concerned that the banks would probably see a decrease anywhere from maybe 10 to 12% in revenues. However, Bank of Nova Scotia has proved me wrong. And that gives me a pretty good outlook on where the earnings will where they'll go when it comes to them reporting. And I'm looking forward to it now, but I'm still a bit nervous to see how the rest of the year plays out with everything going on. And so that's kind of my take on earnings season for the banks here in Canada. They typically happen one after another, just boom, 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 boom. Today was Bank of Nova Scotia on May 24th today. Tomorrow will be the 25th. And two more banks will report their earnings, and then two more after that for the big five. I'm not going to count National Bank, but anyways, that's besides the point. The other thing I want to talk about is dividend traps. Okay, this is something I haven't talked about too much about, but it is something I always chat about when investors or new investors starting out building their dividend portfolio, they tend to chase these big dividend yields anywhere from 6-7%. And sometimes that's risky for me. I don't like that at all. And one of the things you want to look at is if these companies have a positive cash flow to pay out those dividends. For example, Bank of Nova Scotia, I think their dividend yield, we can actually take a look right now. Bank of Nova Scotia here, their yield is now 4.74%. So it's pretty close to that 5% yield. It doesn't show payout ratio on here. It just shows your price to earnings. But there's a line in there when it comes to the stats on any stock or business is the payout ratio. How much of the ratio are they paying out? And I tend to stick to companies that are, on average paying out 75%. If they're mature companies, okay, not brand new companies, but typically mature companies, and banks are pretty mature companies where they're paying out maybe 50 to 75% of their net profits back to investors, and giving back their money as they are invested in the company and hold a position in that company. And sometimes it's very attractive to see a 7, 8, 9% dividend yield on these companies. But we always want to ask ourselves, is it possible to pay out these dividends and continue to increase them while having growth in the company? Now, when it comes to mature companies, they're not taking their money and expecting huge amounts of growth. They're not doing these silly things where the management team or leadership team is going out there and trying to do something that's just totally out of the blue, expecting, a 2x in company growth. It's just not going to happen. And a lot of times when it's newer companies, little less mature companies, they'll typically do that. They'll take, they might pay out a dividend and try to continue to have this exponential growth in the company to keep investors happy. But sometimes that's just not a good play to make. And so when you are researching dividend companies that pay dividends, you want to stay for me, I try to stay below that 50% range, but 75, as long as it's a mature company, I'll go up to that payout ratio. And so you don't want to be trapped in a place where a dividend is not sustainable in a company, and it can really bite you in the butt. And some of those are, for me, for example, is Enbridge. And I know I probably will get a lot of flack for that. And I know a lot of people like Enbridge and have their opinions about Enbridge and have good points. I'm not going to argue that. And you may be right. I'm just not a person who invests a lot in the energy sector because they have quite a large dividend yield and their payout ratio is pretty good. I just still haven't taken the time to research that company and see how that's sustainable in any way, shape, form, any kind of way. But that's kind of it for the video, guys. So stay tuned for those earnings calls if you own these bank stocks. See where they're going, see if they're raising dividends, see if they're doing share buybacks. And I always like to talk about share buybacks because I don't think it's talked about enough. This is where the company takes shares off the market by buying them back, which increases your earnings per share and your slice of the pie a bit bigger so that you're getting a better return on your investment typically. Now, the other thing, in other news, CIBC, which is another bank stock, because we're talking about banks anyways, they did do a stock split, a 2-for-1 stock split that just happened, I think last week there or a couple weeks ago. So anybody who owns those, you probably saw a 2-for-1 split on that. Anything doesn't change anything fundamentally. But yeah, that's pretty much all I wanted to chat about. So just keep an eye out for the earnings calls, see what's going on, because I was expecting a drop in revenue with everything going on. But of course, Bank of Nova Scotia has proved me wrong with their pretty strong performance in the second quarter. And remember, this is only the second quarter. We are probably, and maybe, and I don't know yet, but we're probably on the brink. And I know a lot of people are talking about on the brink of this recession, a recession. And so now is the time to kind of build that battle chest, to get ready to deploy your cash and not deploy it all at once, because I'm still expecting for myself, and this is my opinion, this is not financial advice. I'm not going to pretend to be an economist, and predict that, the market's going to drop some more. But that's just the sentiment that I'm in right now, is when I just expect that if I make a purchase in a company, that it's probably going to drop another 5% the next day or the following days to come. And as we know, in these times, don't panic. If you have to, just stop doing what you're doing and just build up that battle chest to get ready to deploy it when you're comfortable and ready and you have that gut feeling that, I'm okay with it dropping this much. But for myself, I'm going to continue dollar cost averaging in as we go. As you see, at one point we were at like 12K in this portfolio. Now we're down just under that mark, and we just can't get over that hill of 12K because everything just keeps on dropping. But dividends are probably the strongest investment. Dividend stocks, I think, are the strongest investment. Not the strongest investment, but the investment that will keep you afloat during times of economic downturns as they pay out that dividend. If you include that in your performance in the portfolio, I know that this dividend portfolio has held up very well, in my opinion, compared to other positions that I hold in other portfolios. And it probably saved me from, a drop in the S&P 500 going down. I think last time I looked, it was like a 12% drop. It's kept me afloat. We're just flatlining in the performance, but I do enjoy it every single time when I see those dividends come in. And as you know, next week, we are coming close to the end of the month. So I will be showing you guys what we earned for the month of May 2022 when it comes to dividends. And so stay tuned for that video. On that, guys, don't forget to leave a like and subscribe. And of course, again, this is not financial advice, but don't forget to use that link down in the description below for your referral link. Once you fund your account, you will get one free stock value and I'll get one. So it's a win-win, and you can use that towards your first trade. So other than that, guys, have a great week and we'll see you in the next one. Bye.